And here we go. All right, everybody, Stocks by the Numbers, welcome back. I know we took a couple of days off. Hey, listen, Christmas season. 'Tis the season. I hope everyone had a happy and healthy and a Merry Christmas. Hope your families are doing well. I wanted to do a quick update here about one particular sector, two stocks that we looked at on this channel. I know it was before I started gaining some traction here with the subscribers. This was all the way back the tail end of 2022 on December 7th of 2022. I looked at two prison stocks that, as you see, dipped and then obviously had a nice comeback and then absolutely exploded coming out of the elections. And to my knowledge, not many people spoke about them. So I wanted to do just a quick update on both of these stocks. So first one, CoreCivic, ticker symbol CXW. If we pull up a CoreCivic location map, we can see this is all throughout the United States. And I said, in my opinion, looking at the overall sector, talking about how it's defensive, but we also pulled up the facility locator map of both of the companies. And this one, CoreCivic, as we see, is basically here domestically in the United States. And we mentioned that, again, they say here from California to New York. We have facilities all throughout the United States. I jokingly said, in my opinion, I would pick two different states right there because California and New York, we heard about over the last couple of years, just, I guess we can say kind of the lack of law and order in those places. But again, we had a lot of locations in Colorado. So technically, we're in a lot of blue areas, if you will. However, again, technically a defensive sector. We know people are getting locked up. But anyway, we looked at the maps. And again, here on GEO was the other one, GEO Group, GEO. We can see that we had a couple of facilities internationally that we spoke about. I believe they said like UK and a couple of other places. But also here on the domestic side here in the States, you can see we have a handful here in California, but we were also speaking about Oklahoma, southern Florida. We were talking about a lot of the locations down in southern Texas and whatnot. So we were predominantly located down south, right? And again, I mentioned, I'll post the original video down in the comment section, so you guys can go back and double check what I was saying. But I said, in my opinion, both of them look good in the numbers, right? Long term, you'd probably see some good growth. But in my opinion, I would go with GEO over CXW. Now, technically, again, both of them are up right here. We looked at CXW December 7th. And you can see stock was like high 11s. Mid 12s kind of, and at the time they were trending and they were recently climbing up, as you see, hit about 13.5 right before we did our video. So we were talking about the potential pullback down into like the 1070 range or something, but I said, in my opinion, as it began to sell off and come back down to earth, like into the mid low 10s, I would probably be a buyer at the time, hypothetically. And as you see, we continued to dip down for a couple of months, came all the way down to these lows here of 784, and then we bounced, staged our comeback back to where we were, went even higher to the 14s, got up here to the 16s, and then we had our big drop. We flattened out, and now, boom, elections, we pop up. Looks like we have even a potential bull flag forming, so we may even continue to pop up, we may continue to break up and out even further. But we can see 52-week highs hit recently after about a week after elections. And of course, we had earnings come out basically around the same time. We can see phenomenal beat on the EPS side and on the revenue side, sending the stock up to new 52-week highs of $24.99. So even if you bought hypothetically here when we first did the video, you're still up about 100%. If you waited for a sell-off, you're up over 100%. And of course, if you saw the dips down into the 9s and the 8s, in an ideal world, like we always say, we analyze the situation, and in my opinion, we piece our way in, right? We don't go all in. We begin to piece our way in when it gets attractive. And if it does happen to drop before it pops, then if we liked it at 10 and change, we should love it at 9 something. We should love it at 8 something. So hopefully anyone who got in was able to add to their position over the months on the dips. And again, you're sitting here well over 100%. If we pull up GEO, thank you. We pull up GEO, we can see basically same scenario, right? We had a little bit of a dip here, and then we really sold off down into around the $7 range, and then we just stormed back, flattened out, and then had the pop up again recently as well. And you can see GEO incidentally actually missed on the EPS and the revenue side, but still had the pop, in my opinion, off of the Trump presidency. Because now, if we're going to kind of restore law and order, this is why, in my opinion, we had money flow into the, where's my volume? There we go. We had money, look at the volume coming in, even on the earnings miss, right? So that's why, in my opinion, these are kind of the kind of Trump plays that may be flying underneath the radar, right? A lot of people are looking at tech. I know we spoke about food and beverage stocks might be taking a hit now over the next couple of months if RFK, starts banning additives, preservatives, food dyes, or whatever's going on. So all of those companies, we spoke about the potential kind of reformulation that may have to take place in a lot of our snack foods, any foods on the shelves, any beverages. So that's why right now something like that sector might be up in the air. But in my opinion, this recent surge in the prison stocks that, to my knowledge, no one really spoke about, I think it's justified. And again, we liked it here in the numbers, and we spoke about, I said, in my opinion, I think I said if I can get GEO for sub 10, I'd try to be all over it. So again, you can see, we had the dip down to sub 10. This one ended up pulling back to the 7s. But if I like it at 9, 10, I should love it at 7, 8, right? So if you add to the position, piece your way in, it remains flat for you, gives you a lot of opportunity to accumulate shares and build a position. And now, boom. Right? So again, even if you position yourself here, as we said, at $10, $11, you can see stock currently sitting above $28, hitting a high recently of almost 30. So not only did both of them work out as expected, but GEO outperformed CXW as I personally predicted. So, obviously we kind of got that call right. I know it took a long time and we had the dip right away, but again, we looked at them when they were kind of on the up and up and when the RSIs were above 70. So overall, those two did work out. And again, even something like CXW CoreCivic, I mean, could probably be good over the long term as well. But GEO, I do still think I like GEO more. And again, we both had the pop-ups and then the little consolidation here. So we may remain quiet for like a week or two, maybe, and then you see the pop-up and the break up and out going into January and the January effect. So a couple of things to keep an eye on there. But again, we looked at them a while ago and no one was really interested too much at the time. No one mentioned them since then. And I was just going back looking at, some of the older original videos that I put out. And this is one, the original video actually started gaining some views. Originally, I think it had maybe like 100 views. Now it's up to like 400 views. And people have been watching it just over the last like couple of months because obviously now it's popping and it's running. And it's just unfortunate because, again, of course, I wish more people knew about it, more people viewed my video, obviously. But again, these are the types of situations that I like, right? These were two situations that we felt we could have positioned ourselves well in the fundamentals. We could have gotten the stock on sale or even at fair value here around these levels. And you can see over time, they've both done very well. But let's look at some numbers here. So GEO, we're up to about a $4 billion market cap. PE now sitting here at about 111. EPS has been light, missing 3 of the last 4 quarters. Revenue looks like it's holding about that 600 million mark, very steady. And if we look over the years again, you can see the slight dip there in 21 in the revenue and then back up to 238 billion, 241 billion. So again, these are the stocks, as we said, that are going to hold steady. Almost similar, I posted in the Discord just a few minutes ago talking about American Express. Same thing. I looked at it all the way back here, like tail end of 22 or something. Stock was like $164. Now the stock is up to over $300. So, and they pay you a dividend to own it, which was increased and paid out the entire time, right? So was it a very long-term hold? Yes, but also at the same time, when we're talking about an investment, if we're talking about where to position, six figures of wealth so that it's secure and sees that kind of quote unquote secured growth. Also, something like an IRA, of course, whether it's Roth or traditional. You want to lock into a situation, you want to look for those long-term gains that again, that secured growth. That's what I mean. Something like these prison stocks down here at these levels obviously would have been good, but again, something like AXP, reinvest those dividends along the way, stock up almost 100% in value on its own, plus the dividends. Again, these are the types of plays in my eyes a lot of you should be looking for. Now, again, if you're like 20 years old, you got $1,000 and you're trying to, trade some options, then obviously this is something that may not, be directed personally towards you. But again, if you have that kind of time as well, if you're like 19, 21 and you just got into it, listen, I know it's slow, boring, and uneventful sometimes, but as you see over time, if you pick the right companies, you can see the doubles and the triples in the growth, right? So that's why, again, if you kind of know what's coming, it might be in your best interest to start funneling a couple of those dollars into some of these stocks and just lock in that growth and kind of eliminate that stress, right? But annually, again, we have about 2.4 billion in revenue with 3.7% net margin percentage for last year. And we can see the market cap here a touch below 4 billion. So we're trading, less than, oh no, we're trading a little bit more than, excuse me, about 1.5 times annual revenue here on GEO, which could still be viewed as undervalued again, which is why I think they popped after earnings. Even GEO again, light quarter, still had the pop off of the elections, I believe. And that's why I still say, in my opinion, I like them. I do still like them. And if we look here, we don't have, where's our numbers here? All right, well, we have debt right here of 1.85 billion. Company only has 70 million cash on hand right now. Let's switch over here to the balance sheet. We can see the equity was down here in the low ones, got up to the 1.2 billion range, got up to 1.3, slight dip back down, and now popping back up to 1.31 billion. So again, the debt kind of cancels out the equity with an extra about $500 million. So if we come down here, so this would put us at about positive 2 billion, quote unquote, fair value, you can say, and the market cap's approaching 4 billion. So right now, even after this run up and getting to these highs of almost $30 on GEO, stock still, in my opinion, is trading about 2 times, quote unquote, fair value, if you will. The PE is high, but again, the stock has recently been surging. All of our cash flow ratios are kind of the highest they've been if we go back. Sales ratio, price to book, now we're trading 3 times book. Historically, that is viewed as potentially overvalued based on where the stock has been. But again, we've seen other companies that are, sitting at 7, 8, 14 times book value. So even 3 times book value isn't too crazy. Enterprise value, again, what another company would be willing to pay for this company, you can see 5.7 billion as of last quarter. So that's why right now 4 billion. I mean, we may have another 25-35% run to the upside here. But of course, if it just popped and it's been on fire and the RSI is overextended, we may cool before we run up. But our return percentages stayed positive, even though technically they've been dropping. Gross margin down to sub 21.5%. That's actually the lowest it's been. Operating margin, slight increases the last couple of quarters, but it's down here at 13.6%. And we can see before that we were kind of holding like 15. So we could wait and see if you want. Because again, people are going to say, oh, you look at it at 11, now it's at 28. So what, do I buy it now? Like, again, in my eyes, excuse me, in my eyes, I kind of quote unquote knew it was a buy at 11 and in the 10s for the long term. And now we've gone through the long term and the stock is up 100%, 140% or whatever. So, again, after it runs up, now to ask me what's going to happen is, just kind of silly also. But again, sometimes we can't keep an eye on all the stocks. So I understand if you see how well it performed and now you want to get a piece of the action. Again, we'll take a look at stock charts. We'll look for some potential pullback and support levels to keep an eye on. But I do still like it. But, again, you could definitely see 10-20% sell-off, especially if markets begin to pull back going into the new year. EBITDA sitting a touch below 19. I mean, technically, down into the 18s, but before that, 19, low 20s, so getting back to 19%, not too bad in my opinion. Net margin up to about 4.33%, just went negative, came back positive. It's a good sign. Our debt ratios are down. Seeing no dividends. We look at earnings. We can see, yeah, look, we jumped up back into the 600 million mark. And again, predominantly beating for the most part, last 2 quarters coming in slightly light, almost break even, missing by about 1.5%. So now we have to see how we bounce back. But we can see moving forward now, look, we're looking to close out 2024 with about 607 million in revenue. And then moving into 25, look at the jumps up in the forecast. 615 million. That, this would be the most since Q4 of 22. And then going into 25, you can see we're looking to take that next leg higher. 615, 655, and then up to above 700 million going into the second half of 2025. So if they're able to actually bring these numbers in, or at least come close, this is why I think the stock may continue to go up, and even seeing like a 5 billion plus market cap, roughly 25% move would bring the stock up to around 35-ish in change per share. So in my opinion, that's probably where the stock is going to go, 35 to 40, as we roll into these 2025 quarters. But again, that's going to take several months, and being that the stocks are near the highs, we could be forming those bull flags again, but maybe you want to wait for a little bit of a pullback, a little bit of a sell-off. The EPS seems more up in the air than the revenue, in my opinion. And even though we've been missing recently, again, people, in my opinion, are looking out for the longer term now, that kind of quote-unquote potential restoration of law and order, specifically here in the States. So GEO still looking good. And let's check numbers on CXW real quick. Yeah, see, almost basically the same moves on both of these. And see, again, this is why sometimes you have to kind of stick to your guns, supposedly, if you will, right? You have to kind of hold that confidence. And we liked it here. And, if you were a trader and you saw the video here, you immediately saw the stock drop down, right? So in the short term, you're like, this guy doesn't know what he's talking about. If I bought calls when he said he liked it, I would have been screwed, blah, blah, blah. And this is why we talk about the difference between investing and trading, right? That's what makes trading so hard. Is the stock going to continue to go up and remain awesome for the 3-5 months after we look at it? We have no idea. As you see, if you bought calls, you got screwed. However, if you bought shares, as we said, you're in a phenomenal situation right now. And that's the difference, right? You're not held under that expiration deadline. So when you're dealing with options, if we look at a situation and we're talking about a long-term investment, this is why, again, some people in the Discord, when we look at a stock and we make a video, they'll say, I'm buying leaps, or they'll go out to like 2026, 2027. They'll grab some calls and just look for that kind of multi-year growth, right? And then as that date approaches, now more volume is being transacted on that specific expiration date and that specific strike price, which obviously helps run the value of the option up even more. So again, if you don't want to buy the actual stock, you can just buy all of that time on the options. But this is why, in my opinion, I like to look at it more through a long-term lens as opposed to a short-term lens. Because even if you know what you're doing and you're very confident, you can still be wrong. But again, something like this, if I said buy, in my opinion, sub 11, you start buying, then all of a sudden it's down here in the low 9s, it's at 860. Are you pissed off? Yes. However, again, if the numbers didn't change, if we didn't get any massive negative news on the stock throughout that drop, then in my opinion, you're essentially buying a stock that you liked at 10 and change down in the 8s. So that's why when a situation like this happens, you should view it, again, as an opportunity to accumulate shares and build a bigger position for the longer term. But CXW, 2.39 billion. Yeah, this one's a little more down to earth here. PE of about 32, EPS 3 beats of the last 4 quarters. Annual revenue was dipping down to the 1.9s into the 1.8 billions for 23, ticks back up to 1.9 billion. So this is what I mean. Again, the numbers are very, very steady, right? And look at this, even over the quarterly. Look, 483 million, 491, 500 million, 490, 491, right? You have that steadiness, that stability. That, in my opinion, is what kind of added value to the situation as well. But looking like we're going to get close to about 2 billion for the year. Looks like we're going to be profitable for the year. And technically, if we just look at revenue, we're only trading a little over 1 times annual revenue right now. So CXW may be viewed as more on sale than GEO. However, again, looking at the locator, we looked at GEO being, in my opinion, more valuable, with the fact that predominantly in the southern area of the states, where we might have, a little bit more law and order, they might take it a little bit more seriously. And, of course, they had the locations in UK and somewhere else. I'm sorry, I was going to bring that up. But check the financials real quick. Debt, a touch below $1 billion. We got about $100 million in cash. Okay. Yeah, debt. Yeah, we can see the debt for this one up to 1.2, down to sub 1 billion. That's moving in the right direction. Free cash flow this time last year, 65.7 million. Now we're up to 73.4 million. 107, about the same exact amount of cash on hand as they had this quarter last year, about 117 million in change. Assets outweighing liabilities in both the short and the long term. We can see, again, basically same thing, just like GEO, right? Equity kind of holding steady, slightly increasing, slight dip, then we bounce back, currently sitting at 1.48 billion. Book value per share kind of holding the 12s, gets up into the 13s, currently sitting at 13.39. So CXW may be viewed as a little more on sale. However, now, maybe because it didn't have the same type of run, because it has so many locations in, the Northeast and California and Colorado, maybe now under the Trump administration, they might start locking down a little bit more. And now you might have CXW actually have a better year throughout 25 than GEO potentially. But either way, again, just the whole sector in general, I do still personally like it. I'm sorry, what was that debt again? Yeah, about $1 billion. Okay, so that would bring us to about $500 million. With the cash would be about 600 million. And then if we look at last year, yeah, it's over 2.5 billion with a market cap right now of about 2.4 billion. So in my opinion, the quote-unquote fair value of CXW is about 2.5 billion. Current market cap about 2.4 billion. So in my opinion, that's definitely something to keep in mind. Quickly. Okay, we ran up our price to cash flow sitting at about 9.5, which just like GEO is the highest it's been going back the last 8 quarters, but still not too astronomical, right? 1.2 times sales, higher than usual, but again, not too crazy. And again, even the PE, we looked at GEO, was over 100. So this one seems a little bit more realistic. 1.6 times book. Enterprise value, about 3.25 billion. That's, it's about 30% higher than where we're currently trading right now, which would bring the stock up to, like 28 and change. Again, recently hit a high of almost 25, pulled back here to the 21s. Return percentages are positive. Gross margin. Yeah, we were bouncing around. We were at 18, dropped to the 15s, back into the 18s, sub 17, back to 18. Operating margin, double digits, slightly back to double digits, 9.8, 9.6%. EBITDA took about a 1% 1.5% 1% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5% 1.5 Net margin was 5%, came back up to 5%. Now it's sitting here above 4.25%. Again, not big drops. Not big drops. So that's why, in my opinion, I actually still like both of them, even at these levels. But again, we just went on a big run over the long term, and they popped after elections. So if you buy them and they go down, in all seriousness, I don't want to hear it. Our debt ratio is coming down. Yep, no divs. And we can see kind of the opposite than what we saw with GEO, right? GEO had a good history, and the last couple of quarters, the EPS and the revenue was light. CoreCivic kind of had some mixed earnings in the past, but now recently we can see the revenue's been steady 5 quarters in a row. Even the EPS, look, 3 beats of the last 4 quarters. So they kind of flipped the script, and also kind of forecasting the same potential revenue growth going into middle second half of 25, just like we saw with GEO. So that's why, in my opinion, it's almost good in a way that no one talks about this, right? Because they kind of fly underneath the radar. And in my eyes, those are the types of situations that you like. Again, you're seeing that growth. CoreCivic, again, from 11 up to about 22, hit highs of 25. GEO again, nope. GEO. GEO again in the 11s, up to almost 30. So 2 great calls. Let's check stock charts real quick. I'll let you go. CXW, right now we're tightening, right? Potential bull flagging. RSI sub 58, just bounced off the middle of the road. So we could have a potential retest up to 70 and then pull back and just kind of stay in this kind of downward channel here. But ideally, you'd want to see a nice pull back and a retest to this 50-day of about 1930. That, in my opinion, would be a good entry. But even last time, again, they were running up and we said we liked them, and then they went into a sell-off for a couple of months. So if they do happen to quiet down, I mean, this could definitely pull back to this 200-day moving average of about 15 1/3. But I don't know if it will, honestly, after the Trump win. And we can see the MACD cross to the downside, but we've been kind of just holding steady throughout the month of December, and now we can see the MACD potentially flattening and beginning to curl back to the upside. So definitely something to keep an eye on, but it might bounce around for a little bit and then decide to cross and explode to the upside. And on the weekly, we can see, look, we have topped out here on the RSI, sitting here at about 68. We got up to what looks like almost 80, and then we've, again, just kind of been channeling, potentially flagging. So this may remain quiet for a little bit and then get ready to pop up and out. Because we just did have a big break up and out. However, if it drops and remains quiet for roughly the next 4 weeks, and then Trump gets sworn in, and it's officially the Trump administration, then it pops, in my opinion, that would make sense. In my eyes, that would make sense. But, yeah, again, we can see on the daily, we were looking at the 200-day at 1532, and now on the weekly, you can see the 50-day at 1532. So that might be where the stock decides to pull back to. But again, in my eyes, I do think both of them really look pretty decent here. GEO a little bit more overextended, but again, it may be the more attractive one to play, right? Which is why they're keeping it up and breaking it and keeping it broken up, above that 70 benchmark. RSI on the weekly time frame, 78 1/4. But again, we do have this potential flagging. But a nice pullback here to about 19 1/4 would be awesome, in my opinion. Both MACDs, again, flying up high on the longer term time frame. So that's why, if they cool off for a couple of weeks and then pop on Trump coming in my eyes, that would make sense. But I still like them throughout the Trump administration, in my opinion. On the daily time frame, we can see we do have some potential tightening taking place now in the Bollinger Bands. RSI was heavily overextended. Now we're sitting here at about 60 and change. But again, we could be kind of trending downward and selling off. A break here to the 50-day of 23.69 would be phenomenal, in my opinion. But again, just like after we first looked at it, we liked it at 11. We thought we'd drop to the 10s. We ended up dropping to 8 to 7. Right? So sometimes it pulls back more than you think. But again, as I said, if the overall kind of vibe or the story behind the scenes, if none of that changed, then in my opinion, again, you should view it as an opportunity, not view it as a negative. MACD essentially on the daily almost looks identical to CXW, right? We had the cross to the downside. We cooled off, kind of went that sideways downward consolidation throughout the month of December. Now we're potentially flattening out and curling, potentially back to crossing to the upside. So that's why we might cool off. We might drop down and test a moving average over the next couple of weeks. And then we can have another potential breakout maybe going into that Trump administration. So these are two to keep in mind. And obviously there were good calls. But again, I just kind of wanted to recap the whole situation. This wasn't necessarily like, oh, look how awesome I am. I made a good call. Even though technically both are up over 100% from when I looked at them. But unveils 70 million capital expenditures to expand services, plans to reduce debt, right? That news came out about 10 days ago. Phenomenal. GEO Group to depart. Okay. Okay. Just looking to see. Distribution begins for GEO Group. 3 million settlement pay. That's a drop in the bucket. The military will be used against immigrants. Okay, we're reading. See, GEO Group versus CoreCivic. Which stock is a better buy? I mean, technically we did that last time, and we can see GEO over the roughly last 2 years was the better buy. However, both of them did well, right? And that's what I mean. That's why when you have a situation like that, you know, sometimes it pays to just, again, buy the story, buy the sector if you can, buy both of them. But you know, I understand, you know, maybe you don't want to take two positions of the, you know, the same sector, so you're looking for one or the other. I get it. This is the last quarter. Let's just quickly see what they said. Revenues, slight increase. I just want to make sure, again, you know, there's no, like, big red flags. Adjusted EBITDA, nearly unchanged. Again, you know, some people will view that as a negative. I view it as a positive, a nice, stable positive. Which is probably why, again, over time, slowly and steadily, they dropped down, corrected, and then they both climbed like animals over the months and over the years. Because they're stable. Lower than expected. Decline in participant counts. Okay. ICE exercise first 5-year option. Through December 29. And again, supposedly we're going to see big deportations and whatnot. So, GEO, again, I know GEO has the locations, multiple locations near the border. Well, third quarter results were below. We believe we have several potential sources of upside to our current quarterly run rate with possible future growth opportunities across our diversified services platform. Okay, guidance in the range of 19 to 22 cents. Revenue 610 million. Again, just holding kind of that 600 million in change level. Adjusted EBITDA for the full year, range of 30-34. Full year, 2.42 billion. 470 to 480 million. Slow and steady wins the race, in my opinion. Cut to market perform from outperform. This was right after earnings, but again, they went on a massive surge, so I guess I can appreciate that they lowered the rating a little bit. Make prisons great again. GEO Group maintained buy. Price target raised to 32 from 18.75 by Jones Trading. Maintain outperformed Northland Capital. Price target raised to 37 from 16. Right? These are big jumps here. Outperformed Wedbush. Price target raised from 25 to 30. Yep. Let's just go back and go through CXW quickly. I'll let you go. Yep, so, yeah, what? GEO got a new, excuse me, new CEO. They got a new COO. Upgrade from Wedbush. Outperform from neutral. Raised its price target to 30 from 19. Look at these ups in these price targets here. That's what I mean, right? Flying underneath the radar. People forget about them, even the analysts, right? And then all of a sudden, it's like, holy crap, the stock's at 22. We said it was going to 16. All right, we got to bump this up. All right, now it's going to 28. Now it's going to 30, right? But again, in my eyes, those are the stocks that I like. Again, me personally, I like, especially now as we see the influence of social media. That's fine. If this is a stock no one views, no one talks about, even when I talk about SB, right? I'll do an update on SB, and the video will get like 60 views, 80 views. Like, you know what? That's fine, no problem. Again, initially found it at 3.25. Stock ran up to about $6. Recently announced stock buyback program. That's okay. I don't want anyone to talk about it. I like it better like that. Maintain outperform. Northland Capital price target raised from 17 to 32. Right? That's what I mean. Even the analysts are falling asleep behind the wheel. Price target 28 by Jones Trading. Outlook raised. Let's see what they said. Yep. For 24, the company said it now expects EPS 69 to 75, up from prior guidance of 58 to 66. Analysts expecting 61. So we're well above this range now. CXW, not too bad, right? And we were looking in the numbers, and what I say? I said, in my opinion, based on the quote-unquote fair value, CXW may have more upside than GEO. And you can see this also kind of has like that $28, $30 price target, but this one's down here at 21, and they technically came out with a little bit more of good news, upping that guidance moving forward to close out the year. So potentially CXW over GEO, kind of now in the immediate short term. Prison stocks, GEO Group, CoreCivic rally on Trump 2024 election win. History shows the gains may not last. See what I mean? See the way they do that? Meanwhile, we're seeing a potential bull flag, and looking in the numbers, we may kind of agree that both of them have more potential upside to go, right? But at the same time, you see a headline, oh, these just popped on the Trump news, but, oh, yeah, past performance says you might have to lock in your profits. Yeah, because in my opinion, they want your shares. Sharply higher following Trump win. So, yeah, that's pretty much it. We'll end it there. But good calls on this channel. Again, was about 2 years ago. Was the first week of December 7th, 2022. And I'm getting a phone call. But yeah, we looked at it. Took about 2 years. But again, you're up well over 100% on both of them, regardless of which one you bought. So, yeah, I got the phone ringing now. Okay.
Hello.
I don't care. So, yeah, good calls, and I'll end it there. So, once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And, of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But, of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.